Have you ever placed a trade only to see the market spike up, hit your stop loss, and move in the right direction? It's like the market knows where you are, right? Well, here's the truth, it does. And this happens because of liquidity, a hidden force that drives the markets. But here's the good news. Once you understand how liquidity works, you'll stop falling for these traps and trade like the professionals. So in this video, I'm gonna break down liquidity step by step. First, we'll cover what liquidity is and why it's so important. Then we'll dive into liquidity pools and how big players manipulate the market to grab your orders. And finally, I'll give you a practical strategy to trade while using these liquidity grabs to your advantage. By the end of this video, you'll know exactly how to avoid these retail traps and trade them with confidence. Now, what I will be showing you in this video will be very powerful and will potentially change your trading forever. So all I ask from you is close all other tabs, put your phone on the side and give your full attention to this. And if you can't do that, you have bigger things to worry about. So, section 1, the foundation, what is liquidity? Now picture this, you're trading Euro USD and you've just gone short. You place your stop loss above the swing high, like we all have been taught to, thinking this is the safe spot. But then the market spikes up, takes out your stop loss and reverses. Does it sound familiar? That, ladies and gentlemen, is liquidity in action. Liquidity really is the fuel that powers the market. It's what allows big players like banks and institutions to execute their massive orders without creating a chaos. So what exactly is liquidity? Very easily explained. It's basically how easily an asset can be bought or sold without causing a chaos. And with a chaos, I mean a big price change. High liquidity means that there are plenty of buyers and sellers. Low liquidity means there are not as much buyers and sellers. So with high liquidity, trades will happen smoothly, the market won't be affected that much. And with low liquidity, one big trade can really move the market and create a sudden price change. And that's why, for example, I really like to trade Euro USD, as there is so much volume in there. A big order won't really move the markets. But let's say, for example, you're trading a meme coin or you're trading whatever crypto, or maybe even an exotic pair on forex, you will see that some simple orders can really move the markets. And you've probably seen these rug pulls left, right and center on meme coins. That's because there's not a lot of liquidity in the market. So if you then put an order the size of basically the whole liquidity that you have available, you will see the market dump to absolute zero because there's no liquidity left over to use. Now here's the key. Liquidity is not distributed evenly and it's not evenly spread across the market. It's concentrated in specific areas, like above swing highs, below swing lows, or at psychological levels like support and resistance or supply and demand zones. Now, why liquidity matters? Big players need liquidity to execute their trades. They can't just put a $100 million order in the markets without moving it. So they hunt for liquidity in areas where stop losses and pending orders are clustered. Think of it like fishing, right? Big players, they cast their nets into areas where there are a lot of fish. And in this case, these are the liquidity pools. Now that you understand what liquidity is, let's talk about where it hides and how the big players use this to their advantage. Section 2, liquidity pools, the market's hidden targets. So what are liquidity pools? Liquidity pools are clusters of stop losses and pending orders sitting in the market. These are the areas where traders think they're safe. For example, like discussed before, many traders place their stop loss or their pending orders above swing highs or below swing lows because they think, okay, this is a place where I'm safe. But these areas really become magnets for price. I have another example for you. Imagine you're playing hide and seek, but everyone is hiding in the same spot, right? It's just a matter of time until you are found. And this is basically exactly what happens with liquidity pools. So how liquidity pools drive the market? Let's say price is trending up and there is a swing high. Many traders who went short will place a stop loss above that swing high. Now, with a liquidity grab, the market will push up, grab those orders before moving lower. And that's then what we call a liquidity grab. Now, some key areas to watch for liquidity pools: swing highs and lows, key psychological levels, support and resistance, and supply and demand zones. So now that we have a better understanding of where liquidity pools are, let's talk about how the market manipulates these areas to trap retail traders. Section 3, inducement and retail traps. So what is inducement? Inducement is basically just a fancy word for a trap. And this is when the market tempts traders entering into a position too early. For example, you might see a breakout above a resistance or above a previous swing high, and you think, okay, the market is trending higher and it's going up even further, right? So you might think, okay, this is my chance to buy. And then the market goes up, taps you in, only to move to your stop loss, and it just turns around. Again, a very familiar example of a liquidity grab. So two common traps to watch out for is these false breakouts What I just explained to you, when you have a previous area, it breaks above or below, trapping you thinking we're going higher or lower, but only just to turn around. Or support and resistance slash supply and demand traps. You think that the market respects a level or a point of interest area, but then it breaks through to grab stop losses and then it turns around and respects it. Now, how do you avoid these traps? Really the key to everything in trading and also with these traps is patience. Don't jump into the trade at the first sign of a reversal or at the first sign of a breakout. Wait for the market to grab liquidity and also show displacement the other way, because that is when it is showing you signs that it was just a grab. Or if it is not a grab, let's say it is a run on liquidity, you want to see price move through that previous high that you had, but then come back and retest it, consolidate a little bit, moving higher again before you enter the trade. I think these are two very, very crucial tips to take away from this and to take with you into your trading. So now that you know how to spot traps, let's put all of this together into a practical trading strategy. Right here we are on the charts and we're on Euro USD. Let's go back in the past where we can identify some of these areas that we discussed. So first of all, we want to identify liquidity pools that price can go ahead and sweep. Now remember, liquidity pools are basically previous highs or lows, could be a supply demand zone. So these are things that we're going to be looking for and see if price reacts to that. Now right here I see already a very nice example. This is a chart from Thursday, this previous week, and my eye caught this one right here. So price is trending upwards, is moving up higher, and right here we took out this previous high. Now, when you take out a previous high, it's not particularly going to be a liquidity grab, but that's just how the market flows, right? So you create higher highs, you create higher lows. So we have a low right here, we have our high, we have a higher low, we have our higher high. Now, what happens? When we have this high taken out, we start to consolidate. This consolidation is always a good sign that your previous price leg is most likely going to be over. So you can expect a pullback already. Now, before this happens, before this pullback gets into the market, before we get the new price leg created, what do we see that happens? Price takes out this previous high right here. Now, what are the highs and lows that I'm focusing on? Most of the time I will be focusing on really big swing key points. So I will be focusing on higher time frame, point of interest areas, higher time frame, swing highs or lows, but I know every time frame has its charms. Because a thing that we cannot forget is if a 1 hour looks like this, let's say there's a 1 hour time frame, a 4 hour looks like this. And maybe the 5 minutes inside of this zone right here, let's say the 5 minutes inside of this small little zone, this pullback zone that we have, maybe it looks like this. A really scuffed chart, but I hope that you get what I'm trying to say. Every time frame has their own way of giving you value and basically showing you what it is wanting to do. So this definitely is a strong high as it made a new low, or maybe 1 minute or 5 minutes. We're now in the 15-minute time frame. So we see price takes this one out before moving lower, right? It takes this one out, it creates displacement, it takes out the previous low and it shifts structure. So right now on a lower time frame, we have shifted structure as we're breaking the previous low, and we're turning these higher highs and higher lows into lower lows and lower highs. So this means the pullback has been started. So this could already be a very nice place to take an entry from. How would you do this? You wait for this grab, or you see this grab occurring, then you wait for a break with displacement, so this could already be here, or you wait for a very big bearish engulfing, and then you enter the trade. Then how do you put your stop loss? Depending on everyone, depending on every strategy, but you're most likely going to be putting it above the previous high that you have, as if this one gets broken, you're not selling at the right place anyway. Now what you're going to target? You're going to be targeting the next place of liquidity. Now, where is this? Underneath previous lows, above previous highs, above or below supply and demand zones, and support and resistance zones. So what can we see here? In this price leg, is there any point of liquidity? No, right? There is no low, there is no supply zone, there's no demand zone, there is no support and resistance, it's just one way up, right? What can we see here if we come a little bit lower? We see a very obvious place of liquidity, this low that we have right here. This low that we have right here is also beneath the support area that we have. So we can conclude that this is most probably going to be the zone that will be targeted as a liquidity point. So how are we going to be taking the trades? You'll be targeting this low. And what I like to do most often is just target the bodies, just to be sure. And you would have a very nice trade, right? You would have a 1 over almost 4 right here. Now, it doesn't stop there, because we're going to be doing the same thing, just following the market structure. Price moves up higher and takes out liquidity from this zone that we just had right here, right? Takes out liquidity from the zone, basically creates a new higher high, and then starts moving down again. Now, in this scenario, you could have entered right away right here, as it is a very big bearish engulfing. And again, it is just one way up without any point of liquidity. We could argue that this low right here maybe gives some liquidity away. And as you see, once we get here, we do have a pin bar. But again, the most obvious point of liquidity is down here, right? Now, this is not something that I would trade, as it is a very risky one, especially after such an impulse like this. But what happens after is a lot more interesting. And this price moves down below this low and then starts moving up higher very, very aggressively, right? And what this basically tells us is, okay, price is moving higher, right? Price is moving higher. Right here, we're at a place where we've taken out these highs right here, and these highs. Let me remember you, these are 4-hour highs or 1-hour highs, right? So on a 4-hour, for example, as you see, this is a 4-hour high that we've taken out. And this is at that place that we were looking at just now, as price moved up higher, took this high out, moved lower, created a new pool of liquidity down here, moved up higher once again to take out this liquidity, moved lower, taken out this pool of liquidity again, and then it moved away once more. So now, this is actually right now, it is now the weekends, and what can we expect purely looking at liquidity? Now, purely looking at liquidity, we would expect that price is targeting this high. And see how I'm constantly zooming out to a bigger time frame, because if I know where we're headed on a higher time frame, then I also know how to trade the lower time frames. So what is very interesting is that we've taken out this high right here, these bodies, and we're just piercing through it right now. Now, the only thing that is left is basically that wick on the daily, and it is the high right here. So is it possible we get a reversal right here already? Definitely, right? We've taken out a daily high, or at least the bodies of them. So it's definitely possible we see something to go lower right here. Now, is it possible that we're going to be turning around completely? I don't know. Let's go to an even higher time frame. So right now we're on a weekly. And what I often see is that when price moves up without really taking out liquidity on a higher time frame, it is not really going to be creating very, very large moves. Now, right here, this is in 2022, it created a pool, it pushed down lower, took it out and started moving higher from there. This is on a daily time frame, by the way. It was a very big push, right? At some point, this has to end. So right here, we started to creating liquidity pools again, has been taken out, and then we move up higher once more. Basically, and believe me, I've been in these pools a lot of times, especially on Euro during 2023, 2024. Damn, this was a difficult chart for me. I have been in the liquidity pool multiple times, and that's how I know that is actually spot on, right? This is actually spot on. So price is moving up higher once more right here. And as you see, price takes out the low, moves up higher again, takes out these highs, moves lower again. Right here, very good example, moves lower, but before it is moving away, it takes out these highs again. Once it takes out these highs, it moves lower again, taking out liquidity from here. And this is basically just like a ping pong situation all of the time. So then we are right here, September 2024. It was a very, very exciting month for me, as like I said, I was a liquidity pool for years on Euro, and I've been shouting like it was almost like the big short that Euro USD is going short from, I don't know, where was it? Somewhere this place. So October 2023. So I've been selling EU basically after this point for almost like a year. And then in September 2024, my wishes finally got true. And we got above this high right here. Very big liquidity point. We moved lower once more. But then what happens, and this is basically the point that I'm trying to make, before a big move can occur, like a very, very big move like this, there's a lot of liquidity needed. Okay, you need a lot of money to make a move like this. How are we doing this? By creating liquidity pool, and taking every damn liquidity pool out. So as you see right here, we have a high, we have a low, we have a high in the middle right here, it gets taken out, this low gets taken out, this high gets taken out, and then bam, we have that big move afterwards. This was also when the news came out that President Trump was going to be elected. But I almost always see that news and technical analysis go hand in hand. Now, price moved lower. What does it do? When we take out this low, it moves higher again, taking out some liquidity right here in a lower time frame, moving lower very aggressively again. And this has to come to an end some point, right? At some point. So what are we doing right now? Where are we in right now? We're creating a liquidity pool. So we're creating this low, creating a new high, taking this one out, taking out this low, and now we are slowly building our way back up again. So what is most probably the target for me? It's going to be this high right here. And then I would like to sell euros somewhere from this zone again. And why? Purely because we're making a very, very nice effort to taking out liquidity again. So how can you use this? Very, very practical. Now we know, okay, the overall direction is bullish. We're most probably going to be targeting this high right here. So what we'll be doing on a lower time frame, let's say we go on a 15-minute right here. We're going to be identifying, okay, where is the liquidity right now? Price moved higher right here. Created a low, created a lower high. Higher low, lower high. Now it is moving lower. It has taken out this low right here. But what is the most obvious low that we have in this picture right here? It is this low and this low. These two lows that we have. All right, this low and the second one is right here. So these will be most probably the areas of interest where we want to see price come to before moving up higher. Because right here, there is no liquidity to be taken. Now, what can also happen is that, of course, price is going to be creating his own liquidity pool right here, take this one out, and then move up higher. So this is something that happens pretty often as well, is that price is creating liquidity at this place where we are right now, takes that one out, and then it moves up higher. So or it takes out liquidity from the price leg, or it takes out liquidity that it is creating inside of the current price leg or consolidation zone before it moves up higher. So these are definitely two things that you want to be looking for before you're entering a trade. I would say this is a key factor, but not, of course, the most important thing of your strategy, but it is definitely a very good confluence to have as an extra. So basically putting all of this together, in the end, you still want to practice this as much as possible. Practice, practice, practice is always going to be the number one way how you master these concepts. So I would say start by studying your charts, look for liquidity grabs, look for market structure shifts and institutional zones, look for POIs and see how price reacts to that. See how the market flows and see how liquidity fuels these moves. The more you do this, the easier it will also become for you to find your high probability setups. And remember, in the end, trading is a game of patience and discipline. Don't rush into trades. Wait for the market to show its hand and then act with confidence. Risking your money on a trade that's not worth it is just really burning your money for no good reason. So look at it with an investor mindset. Look at it in this way. Where can I buy or sell in the best and safe place possible? And don't just gamble with your shots. So quick recap, liquidity is the fuel behind the markets. By understanding liquidity pools, avoiding these traps, and combining it with market structure, you can really trade a lot smarter and with more confidence. If you found this video helpful, please give it a like. Consider subscribing, as it is my goal to reach 100,000 subscribers. And let me know in the comments what is the biggest challenge you're facing right now trading wise. I will respond personally to all comments to help you further with the challenges you're facing right now. Thanks for watching and I'll see you in the next one. Bye bye guys.